You're here to learn how Teladoc can make you rich, and today we're going to take a first kind of introductory look at how they've been doing and what we have to look forward to in the future as investors or potential investors. Welcome back to the channel. My name is Trey. I don't say that anymore. Welcome back. My name is Trey. No, that's not good either. Those of you familiar with Cathie Wood and her ARK funds are probably already aware of the fact that Teladoc is ARK's number 2 holding across all its different funds. They hold the stock in 4 of their different funds, including ARK-K, ARK-W, the Next Generation Internet Fund, ARK-G, the Genomic Revolution Fund, and ARK-F, the FinTech Innovation Fund as well. This whole segment is all very new to me. I'm not like a healthcare professional or anything like that. And in fact, when it comes to the genomic stuff, I'm comfortable outsourcing all of that research and investing to ARK. And so I am invested in Teladoc as a result of that. But this time is my first time putting together a video and doing like proper research on who Teladoc is and kind of looking into this whole market segment. Despite getting hammered after the last earnings call, showing weaker than expected forward growth prospects, which we'll get into in a little bit. We see here in the 1-year chart, check it out, that huge dip just a couple of weeks ago. For obvious reasons, telehealth exploded in popularity, resulting in more than a 200% growth in usage over the last year. People don't want to go to hospitals when it's very likely you'll get a pandemic if you go. So telehealth and Teladoc have grown substantially in terms of user growth and also revenues. ARK continues to be buying into Teladoc as recently as March 19th. Cathy'sARK.com shows a list of all the holdings and buying patterns, which is a helpful tool too. Check it out here, March 19th, 18th, 18th, 17th, 17th. And very interestingly, on Cathie Wood's recent In the Know program, people were saying, dude, aren't you gonna have liquidity problems when all of your tech-focused companies start dropping in value and then everybody starts to pull their money out? And one of the things Cathie said was that actually, yeah, we might need to let go of some of our smaller, lower conviction holdings, but we're going to be plowing money back into our higher conviction holdings. And I've been doing a series on Palantir. Click up here if you want to check out the playlist. But Teladoc is one of the other stocks that they just continue to keep buying into. And so check it out here on this chart. You can see that as the price goes down, they just buy more and more. Like that's how convinced they are to be in Teladoc. So before we take a look at the financials and kind of the future outlook, let's take a look at what they even do. That's something that I think is really important as an entrepreneur, but also as an investor, and that strategy of really getting to know the fundamentals of how they operate and who they are and what their values are. That served me well as an investor over the last 10, 12 years. So let's take a look at who they are. Interestingly, they just went public in 2015, but they've actually been operating since 2002, and they were started by 2 guys, one of whom was a NASA surgeon. And when you're working with astronauts in outer space, but you're not with them, how do you help them? You need to do it over the internet. And so that was the beginning of all of it. And that's spread now to more than 50 million users. They work with small businesses who are trying to get good insurance or good coverage or good care for their employees. They also work with individuals, but they also work with care providers, doctors, hospitals, and they provide the platforms to be able to provide the services. So they're like end to end across the whole thing. Check it out. Here's a more zoomed out view of the stock price. So you can see how it's been changing over the years. You see basically after 2020 started, it really took off. But just kind of like slow, steady growth over the years. But as I mentioned earlier, this whole area of healthcare isn't my wheelhouse. I did a video on desktop metal and 3D printing last week. Click up here if you want to check it out. But I'm very much like wanting to learn more. So especially if you're in the healthcare or the health insurance industry, please let me know down in the comments section, like how you see this playing out, or how you've seen it being beneficial, or if you think it's just a waste of time. Please let me know down in the comments section, either now or at the end of this video. So looking at their website, they say whole person virtual care for better health outcomes. For those of you who are not American, it's probably hard to imagine how terrible the American health system can be, but there are a lot of different things that make getting good whole person healthcare really, really complicated in America. I was born in Canada, grew up in America, and now I live in Japan. And thankfully, it's for the average Joe, it's pretty easy and very, very affordable here in Japan to get dope healthcare. pretty good healthcare. Not like the world's best or whatever, but in America, that's not really the case. And there are a lot of people who just can't ever get health insurance, or they have health insurance, but, they can get treatment for that kind of thing, but not that kind of thing. And so, they're struggling with depression or whatever, but they can't get care for it. But Teladoc comes on the scene and they say, hey, we're trying to cover the whole spectrum. Scalable, secure platform with over 20,000 visits supported on our busiest day, 24/7, 365 in-house operations. Going on to the middle there, medical quality, more than 450 medical subspecialties, and 100 plus virtual care clinical practice guidelines. Then on the right side, unique engagement engine with 3 times higher registration rates with surround sound marketing and 4 times utilization over industry average. So they're saying our clients who use us are comfortable using us for 4 times more stuff, healthcare issues or visits or things like that. And that's a really good sign to see if you're thinking about not only joining this as a user, as a client, or as a patient, but also as an investor. It shows a high satisfaction rate, but it also shows that it's providing really good new type of value for people. Because typically in the US, you're like, it's too expensive, I can't pay my copay, so I'm not going. Or dealing with insurance stuff is way too complicated. Or I don't want to go because the facilities suck, or the doctor's not nice, or I'm going to get sick from somebody else who's over there. And I know a lot of friends in the LA area, especially, who work in like emergency wards, and they say it's just like a madhouse. Teladoc doesn't provide emergency services as far as I can tell, but basically those are a bunch of reasons why people are uncomfortable utilizing the current healthcare system that they have. Going on down on their website, they have telehealth. So convenient access to high-quality healthcare, millions of people around the world have connected with Teladoc Health. After a visit, 92% of patients reported resolution, demonstrating convenience, outcomes, and value for members and plan sponsors alike. Next one, this one's huge, mental health services. Around the world, people need greater access to high-quality mental health care. Our mental health services range from ongoing visits with a mental health care specialist to expert medical opinions for complex cases. With more than 33 million sessions completed by our licensed therapists, psychologists, and counselors, Teladoc Health has helped people receive guidance, support, and relief. For those of you guys who struggle with mental health issues, I encourage you to talk to somebody, whether it's a professional or a friend or a pastor or whatever that's around you. I know here in Japan, mental health is like not even a thing. Like for a lot of people I know who struggle with mental health, and apparently half the country has depression or something like that. They go to the doctor and they're like, oh, eat this medicine. You'll feel better in a few days kind of thing. And it's like, that's like a Band-Aid. That's not a real fix. But services like telehealth, I think if you can remove a lot of the social stigma, especially in places like Japan, of being like, oh man, I don't want to be seen going into a place like this or something like that. Like services like this can really help to change the game for you, your family, and for society as a whole, actually. Chronic care management with smart connected devices, personalized digital coaching, and 24/7, 365 access to health professionals for a human touch when the member needs it. Teladoc Health empowers people with chronic conditions to live better and healthier lives. So it's pretty interesting that you may have connected devices with certain conditions, and your healthcare provider over the internet can access and kind of see what's going on and then adjust your treatment as needed. That's pretty neat. Speaking of chronic care management, I should also mention the Teladoc and Livongo merger. Livongo is a coaching service that helps people to manage their chronic conditions. The deal was valued at $18.5 billion, which some people consider absurdly overpriced, seeing as it was one of the largest acquisitions of 2020. But providing services like this allows Teladoc to really round out their services and to become a more complete package. So most of that wrapped up in 2020, but I should mention that with that $18.5 billion price tag and all of the different like fees and costs and stock-based compensation and merger costs and all that stuff associated with that, the whole 2020 and all of the quarters in 2020 report cards look like super garbage. And we'll get into the finances in a minute. But one of the really impressive things for investors, I think, about providing really, really good quality care for chronic conditions like lower back pain or depression or things like that, is that those clients, if they're satisfied with you, they're going to stay with you for a very long time and hopefully be healed. But even if they're not healed, they'll be able to stay on. And if they're satisfied, they'll be getting value while you, as the owner of the company, will be continuing to make money. Teladoc serves more than 51 million users, and they have more than 12,000 clients, meaning partner providers. And since 2005, they've completed more than 15 million virtual care visits, which is the largest in the industry. They're in more than 175 countries too somehow, which kind of blows my mind. And they show a 90% plus user satisfaction. Teladoc works with existing health plan providers, and they also work with more than 70 global insurance and financial services to extend their services as well. All of this sounds great, and it sounds like, yeah, sign me up kind of thing. But let's take a look at the financials before we make a decision. First of all, let's start with some of the more encouraging stats for you from their recent presentation. Q4 revenue grows 145% year over year to $383 million, and total visits increase 139% to 3 million. Full year revenue grows 98% year over year to more than 1 billion, and total visits increase 156% to 10 million. So they're saying for the whole year we did 10 million visits, whereas since 2005 we've done 15 million visits. So the number of visits is starting to ramp up parabolically, which is really exciting. Going on, they say, as virtual care shifted to become a consumer expectation in 2020, Teladoc Health not only met the rapidly growing demand, but we transformed our company to define a new category of whole person virtual care, said Jason Gorvick, CEO of Teladoc Health. By accelerating our mission to transform the healthcare experience, we exceeded our fourth quarter and full year 2020 expectations and see strong momentum across our global business in 2021 as the market embraces the breadth and depth of our unique abilities. So they're saying we're kind of making a new thing. Like nobody's really been able to provide end-to-end service regardless of your situation, regardless of your needs, and regardless of where you are in the world either. So he sounds pretty confident, but let's move down the page. He shows a revenue chart. Life pro tip for young investors: if the first chart that you see in an annual report is only revenue and there's no mention of any expenses, be aware that there's probably going to be stuff that upsets the short-term minded investor coming up. So check it out here, revenue chart. Total for the entire year 2020, 2019, up 86%. That's a really good sign to see. Visit fee revenue was up 130% for the whole year when you compare 2020 to 2019. And then going down to the bottom, you can see total revenue up 98% year over year. Next, let's take a look at the visits. Broadly speaking, we're seeing very significant year over year growth across the board, which is excellent. Of particular note is the utilization numbers here, like I mentioned earlier. They're up from 9.3% to 16%, which shows you kind of like the people who are in the system, the clients, the patients, whatever you want to call them, are using things more, which is generally a good sign. We do see total visits also up 156%. So I mentioned the Livongo merger costing a lot of money. Let's take a look at how that kind of hit the bottom line here. The net loss for 2020 was $485 million, which is like massive compared to the 2019 net loss of $98.9 million. It was almost 5x. And a huge portion of that was Livongo related, including stock-based compensation, integration costs, and the tax benefits of the merger. All of this led to a loss of $5.36 per share EPS, compared with only a $1.38 EPS loss in 2019. EBITDA was also a $437 million loss for the year, up more than 10 times from 2019, which was only a loss of $41.5 million. But when we adjust the EBITDA to deal with these one-off expenses, the adjusted EBITDA ends up being a much better picture for Teladoc. Total year 2020 brought in a $127 million EBITDA versus just under $32 million in 2019. So they're really clear about how devastating for the short term this whole Livongo deal is. And they've been criticized actually in the media and Wall Street largely for paying too much for the deal. But it seems like with these utilization rates going up and customer growth continuing, it seems like management's pretty confident that this is going to pay off in the long run. So what's up with that huge stock price dip we saw recently? Basically, what happened after they announced their earnings, some people were bummed out by, the EPS loss and EBITDA and all that stuff. But actually, the thing I think that upset more people was that they were saying, we're only going to be growing our user base by about 7% this year. And when pressed on that, CEO Gorvick basically said, we're in the habit of being extremely conservative when it comes to making forward projections. And people are saying, dude, you've been pulling off like 150% growth and all this stuff for so long. Why are you only expecting to grow by like a couple million clients this year? What's the deal? And he says, we're just in the habit of putting out conservative estimates. We like to beat them. We like to keep it loose, you know? But he also did say revenues are going to be growing big time, and the number of partnerships and utilization are going to be continuing to grow. So he's kind of sandbagging it just so that expectations aren't too extreme, I think. So looking forward, management has given us a few of their expectations for 2021. Check it out. Total revenue will be in the range of about $2 billion. EBITDA to be in the range of negative $110 million to negative $90 million. So that's a good improvement from the last year. Adjusted EBITDA to be in the range of $255 million to $275 million, including an estimated $20 million in lower expenses primarily related to Livongo devices as a result of the merger. Total U.S. paid membership to be in the range of 52 million to 54 million. That was the one that upset everybody. And visit fee only access to be available to 22 to 23 million individuals, including 2 to 3 million individuals on a temporary basis. Total visits to be between 12 and 13 million. So remember, since 2005, they've pulled off a total of 15 million, about 10 of which were last year. So they're saying we're probably going to up that to 12 or 13 million in the coming year. You know, so maybe the days of super parabolic growth might be behind them. It's hard to say, but remember, they like to keep their expectations low so that when they get around those expectations or exceed them, people are happy. A quick glance at the consolidated statement of operations shows the most alarming change to be the tripling of general and admin. But if we can keep revenue growing at a similar pace to what we've been seeing for the last couple of years, we could outstrip that G&A expense into large profitability in the coming years, I think. So what do you guys think about it? Especially for those in healthcare, I'm really interested to hear what you think. But we should also think about competition. You know, Amazon is talking about coming into this space. There are shifts starting to happen in the way people think about healthcare. And also, I think, especially with the new administration in the country, you know, we had Obamacare many years ago and stuff like that. And there's just a huge, very upset portion of American society that doesn't love the way healthcare is run right now. I think there's going to be a lot of change coming up. It's clear that ARC really, really likes Teladoc and thinks they're going to be one of the ones leading the way going forward. What do you guys think about the stock? Again, I am in the stock via ARC. I'm still learning about the whole sector. I don't know enough to be able to be like, I'm going to put a bunch of money down on Teladoc right now. So I'm really interested to learn more from you guys. What do you guys think about it? What position does Teladoc hold in your portfolio? Thank you guys very much for your time today. Love you and talk to you soon.